You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from, including many, many archived episodes of this here Option Block program. We sound a little bit different now than we did last week because we were coming to you live from the big Option Pit Educational Extravaganza, a.k.a. the Professional Traders Summit. You can hear that one. A little bit of a fun background chatter in there in that show as well. You can hear some of the audience and the listeners asking their questions. All sorts of fun stuff. Check that one out on the old feed if you haven't done so already. But now we're back in the studio, at least I am, and the rest of our cast beaming in from around the country. But before we get to them, of course, you can always find those archive episodes. The easiest place, the mothership, the flagship of these options. Easy for me to say today. TheOptionsInsider.com, or, of course, via iTunes, TuneIn, Stitcher, so on and so forth. And if you're floating around iTunes, if you feel like leaving us a review, go for it. You know, we never really talk about that, never really ask for that, but hey, go for it if you are so inclined, if you're an iTunes user and you like it. Or if you use our app and you run iOS, either way. Nice, if you want to leave 5 stars or maybe -1 for Android, I understand that. Then you can go for that. Or just do whatever you like. Speak from your heart. We love to see what you guys have to say. Even though that stuff probably won't make it onto the show just because it's such a lag time between the reviews and iTunes and other places versus, hitting us up via Twitter or Facebook or all the other places. People usually hit us up here on the show to express your more immediate feedback. And speaking of the Rock Lobster, I believe he is back in his provincial home known as Maine now. Mr. Rock Lobster, welcome back to the program. Good to see you last week in person in the Option Pit Extravaganza. How are things now? How was the rest of the event? How did the big professional trading summit go?
It was a lovely event. Clients seemed happy. We had very good speakers. And all a success. I think next year, though, we're going to do it in May, because I'm not leaving Maine in July anymore to go to Chicago. That's just crazy talk.
It was a wee bit warm. Too warm for your blood?
I'll do a lot for Option Pit, but leaving Maine in July and August that's above and beyond the call of duty, I have to say.
You got to see a nice baseball game on the rooftop at Wrigley there, have a delicious steak. There are worse things to do in Chi-Town.
Oh, no, it wasn't painful. But I could do all that in May. So I would rather do it in May. That's all I'm saying. I'm a little spoiled. I have to say I'm spoiled.
You are a wee bit spoiled. And speaking of that spoiled fellow, he had the day off last week, but now he's back to join us for some strategy and all sorts of other fun stuff. Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir. We missed you live in person last week.
I was there in spirit. And just one thing to Andrew, what if you come here in May and we get snow in May, in Chicago? Does that concern you at all?
I live in Maine. Snow in May does not concern me in the slightest.
Okay, got it. So he just likes the cool weather, I guess. So, all right, I can respect that.
He's a northern. Go ahead.
Nobody leaves May and July and August that lives here, because that would be crazy. The whole world comes here for a reason, so why would you want to leave? That's all I'm saying.
That's what you're paying.
Yeah. That's what you're paying. All his buddies are making fun of him now, I bet.
Such a pain the big Maine dollars for to live in Maine in July and August, right?
Exactly. All $8 it costs to live here.
$8 a square foot. Premium
I'm
pricing,
surprised
sir.
There's not more retired option trader guys here, to be honest. But hey, say la vie. That's the way it is.
Hey, you keep doing the show, we may be able to increase that population of that town to at least 101 or so out there. Maybe a handful of new options traders. We'll make it all the way up to the Duchy of Maine. Meanwhile, it's time for us to keep on rolling with the program and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking in the world of options today, and indeed in the broad market as well. We are recording this and indeed streaming it live on Monday, July 25th, 3 p.m. Central for all of you so inclined. I always forget to mention at the top of the show, but if you are so inclined, follow along over there via Mixlr, M-I-X-L-R. You can grab the app on your mobile device or just click on the link. It'll take you to a browser window that'll open up our little mini chat room here for the show. So if you guys are available and want to stream it, wherever you are, we'd love to see you guys in there. You can fire away with some questions, some comments, some pearls of wisdom for the Rock Lobster, all sorts of other fun stuff. And of course, after the fact, we love you guys too. You're not being left out in the cold. We just wanted to add a little bit extra pizzazz for those of you who could and are able to join us live every Monday, 3 p.m. Central, and Thursday, 3 p.m. Central as well. And of course, an interesting day it was after looks like perhaps a potentially promising start. The market kind of faded as some of the earnings and oil combined for a little bit of a 1-2 punch, weighing on most of the street today. S&P closing off nearly half a percentage point or so, a little over 8 handles. The Dow off right about half a percentage point or so. The Qs almost unched, which is surprising given some of the news we saw coming out in the tech landscape today. And of course, all this red on the broad screen means VIX cash inhaling a little bit today, getting some of that weekend back, as well as, of course, a little bit of gain on the sell-off. Up about a handle to right back at that mythical, magical 13 level. You know, we were debating that on vol views last week, kind of what happened to that 13 handle. It seemed like that was a strong support in the market, and it seemed like cooler and calmer heads were prevailing and saying there still are a lot of unknowns like earnings and, of course, the Fed and how this Brexit thing is going to play out and a bunch of other things floating on the horizon, enough to maybe give us a little bit of cause for some vol in the marketplace. But as is the case this time of year, the vol trader is not having it, willing to crush it way down south of the 13 handle, down to 12 and beyond. So, yeah, it's that time of year. No one wants to own any vol unless they really have to. And except for today, of course, when it gets a nice handle or so back in its favor. So perhaps we'll start there. Mr. Rock Lobster, interesting day. Vol catching a little bit of a bid after people kind of just dropping it like a hot potato for the past week, not wanting to touch it north of that 13 handle. Now getting a little bit of love back as the market selling off, perhaps on some earnings fares to come, sir.
Did I win the vol views crystal ball last week?
Was that you or was it Mark who had 12 and I think 12.25 or something like that?
It was me.
Oh, it was you. Okay, so that I had it. I thought I had it under Mark. Maybe I had it. Maybe it was you. Whoever picked that one, yeah, you were about a tenth of a handle off. So you won. Yes, you won the dubious honor of going first if you were on the show, which you were not. You were on a plane. I'm
just saying, I think you should start tweeting that kind of stuff out like that, because you know how important that is.
That is big money. You know, you win the crystal ball at the end of the year. That's like like an Arby's gift certificate or something.
At least, or I'm just thinking whatever beer is left in the refrigerator after Sebastian is there for one of the shows.
Well, yeah, don't come after Sebastian comes, because the fridge is pretty much cleaned out. I think my bar tab for Sebastian is getting pretty extensive.
The cupboard is bare. What I will say about volatility is VIX up, vol futures down, at least by the looks of the vol products. You have VXX down. UVXY obviously is marked up because of the stock split. But all of the vol sensitive, all the future sensitive products, it looks like futures down with cash up. So kind of a weekend effect. There's a lot of premium built into that August future, a lot of premium in the September future. And vol traders, I think, are just waiting for that VIX to jump back up. And they're leaving the futures still, like in the 15 handle, September and 16.5, 17. So they're just making the futures really expensive, and they're telling everybody to come and get them. And as of right now, they're just decaying away at a very steady rate. So I didn't see anything unusual in vol except for, and Mark, I think, mentioned it last week probably, a little bit of a hair trigger on Thursday, how fast they can take the vol up. So for everybody trading options out there that sells premium, when the vol goes from 20 to 24, it would hurt you, but it's not terrible. What really hurts is when it goes to 12 to 20, the first, or 12 to 18, because what you get for the premium you sell if it blows up to 18 is much worse. So just choose wisely. Choose wisely if you decide to sell any premium when VIX is slow.
Yeah, it's kind of what we were saying on vol views, and we echo that sentiment here. Yeah, this is definitely as the infamous Don Schlesinger likes to say, in volatility, sell or don't sell. This may be a time when perhaps you sit on those hands a little bit and wait to see what the market's giving you before you start crushing it with the cash in the 11 or so handle, and the future's not that far removed. Crushing bids in that environment is it doesn't exactly build confidence there. Yeah, and also you mentioned crude weighing on the market today, off about a handle or so, depending on where you're looking at the futures out there, about 2.5%. In WTI, of course, other products a little bit different percentages, but still, that's what we've been talking about. Certainly in vol viewers, also on TWIFO a lot recently about the options premium, the skew, all still leaning heavily to the downside out there in products like WTI, and we were kind of scratching our heads about that. Now it seems like, in retrospect, all that downside concern still warranted, as there was a lot of news coming out today kind of weighing on crude. We saw, of course, I guess you can call it essentially a global glut, of crude, especially refined products, still more out there than anticipated. And that's kind of just weighing oversupply, weighing on crude, basic supply and demand, your basic Econ 101 coming back to haunt crude traders. Uncle Mike, that action in crude out there catching your eye via XLE, and what else is catching your eye out there in today's activity?
Well, yeah, for sure, oil's the story for the day, but we have a really busy week this week, and the fact that we have a really busy week, and we have, in my opinion, kind of a lower VIX for the busy week with which we have between all the earnings announcements, and we have some pretty big earnings announcements this week. We have a potential Fed meeting. We have riots in the streets in Philadelphia at the Democratic National Convention. We have Verizon buying Yahoo. We have a lot going on, and my thought is that something, with everything that's going on, something could move this market. So I'm kind of thinking, not that I'm a VIX expert by any means, I saved that for the boys over at the option pit, but this seems a little bit low to me to be a big-time option seller at this point.
Yeah, it's kind of what we were just saying. You got to really kind of sit on those hands, maybe avoid the temptation. Might be a few blips in a certain single names right now due to earnings season that may be a little bit more attractive from a premium harvesting perspective. But overall, this is definitely a kind of time you maybe want to play a little wait and see right now. Speaking, of course, of waiting and seeing, and perhaps a little bit of concern going into earnings, Uncle Mike, your favorite former holding, and still a modest holding, if not the massive portfolio element that it used to be over there at RCM. This is, of course, the beloved fruit company, Apple. They are indeed coming out after the bell today, actually, Uncle Mike. So quick, go get your hedges off in the after hours before the number comes out. Oh wait, no, I'm just teasing, Uncle Mike. Of course, it is not today.
The tradition continues.
Yes, it is indeed tomorrow here, coming out after the bell on all things Apple. And yeah, it wasn't exactly a boom day out there. They were off about 1.5%. That's on the heels of course, we were talking last week at the big option pit event about how the watch, bit of a dud, sales off 55% compared to this time last year, and now a fairly decent size house, BGC Partners, downgrading them today, and downgrading them to a relatively rare rating of sell. You don't see that very often in the market, certainly more now than you did, let's say, 10 or 15 years ago, but still, that's a very rare rating. They changed their price target to 85. It's trading 97 and a quarter right now, so off about another 12 handles. They're citing a lot of the things you may already assume with Apple. They cited 6 major reasons for the downgrade. Risk of the upgrade rate for the new iPhone will be less than the previous iPhone. Unease with management's positioning of the business for new revenue streams in the future. I think Uncle Mike feels number 2 there. Concern that consensus estimates may be revised down for the SEP and DEES quarters. They're not really concerned with June, apparently. Uncertainty in management's optimism that the smartphone market is going to return to material growth, and awareness of the many areas where Apple is lagging or has no presence, including streaming video, content, advertising, virtual reality, automotive, although the latter may kick in down the road a little bit, AI, connected home via HomeKit, etc., apps, all kinds of other things like that. So they pretty much list a litany of reasons why they're not feeling the love. And they're not quite as bearish as you were, Uncle Mike, where I think you said your price target, or where, instead of price target, I should say where you would be writing those puts is about the 75 handle. They set theirs for about 85. But what are your thoughts on this downgrade? And also, how are you positioning, if at all, for the big number tomorrow in the fruit company?
No, I mean, it's a small holding of stock only, but it's a very minimal that we have. I mean, I got a couple people that are collared and long-term collars, but it's very insanely minimal. I mean, it's not even close to a core holding of mine. But a couple of things on Apple. They do, on the positive side of Apple, it's like they go in these cycles of when everyone buys a new phone, and they do hit it pretty well when they release a new phone and people buy a new phone. Now, there's some people that are only going to buy Apple phones just because they're Apple. And my uncle, for example, he's a lifetime dry cleaner, wonderful man, very smart in what he does, but he's not a very tech-savvy person. But he owns an iPhone. And I just remember helping him with his iPhone a couple of weeks ago. He had something, message coming up or whatever, and the fact that he's, or I think 58, and he pretty much tries to avoid computers at all costs, but God bless him, he has an iPhone. And so it was something just very basic I helped him with to get some message to stop coming to it. But in looking at it, I'm like, oh, well, I have an Android phone. Have you ever thought of getting an Android phone? And both him and my aunt, their eyes got big. And they said, oh, those are way too complicated, aren't they? Just because of the fact that Apple has a stronghold on my uncle. He's always going to buy an Apple product because in his mind, it's simple. And I believe that there's a lot of people out there like my uncle that will always buy an Apple iPhone. And so I think that's a good thing that Apple has, but and they're always, I don't think they're going to be a company that goes the way of AOL, Time Warner, or Molly Corp or anything like that anytime soon. But the problem is that they don't have anything new and innovative, and they have set their own bar so high, which is a good thing, to where until they get some type of new innovation or the stock dips a lot, I really don't see them coming up. They're kind of like the New England Patriots. If the New England Patriots don't win a Super Bowl, then it's a bad thing. Now, I don't want to get into the Tom Brady thing and Deflategate and all that stuff on this show, but my point is that Apple plays by their own set of rules. They're in their own league, and they're in last place in their league, but they're the only ones in their league because their league is just so far high and above everybody else. But until they get something new and innovative, it just ain't going to work.
Yeah, that innovation risk seems to be one of the key risks that they cited over there at BGC as well. And now, of course, the watch was supposed to be one of their new product categories, kind of having withered a bit on the vine. I think the whole smartwatch category, I'm a fan of it. I have one, but not many people still really need it. You have to kind of have a use case you kind of fit it in. There certainly are places where I'm like, oh, this is very helpful. I'm glad I don't have to pull my phone out right now and check it. But that's not for everybody. Certainly not for your proverbial uncle out there, Uncle Mike. How about you, Mr. Rock Lobster? Was Apple lighting it up in the pit chat today, or if not, what was the big story in the realm of the pit?
You know, we're actually looked at a trade in there. The near the money straddle, I think, is only 2.9%. That sounds awfully kind of low, doesn't it, for earnings in there? Especially with the potential for phone sales to be, they could be bad. It doesn't look like a lot of money for a straddle in there with 3 days to go. Yeah, the at the money straddle, maybe a little bit. So 10% would be $9. No, it's $4. I guess the 97.5 is Yeah, it's $3. It's not a huge amount. What is that, like 3%? It
was about 3%
the value of Apple.
It was about 3% going into the close. Maybe they bid it up a little bit on the close there, but it was about 3%. Yeah, that was kind of our thought as well. Not really a massive. Yeah, it's not really a massive.
Those things used to be like $6.
Yeah.
So all I would say is, I think a lot of times, and this is a subject we're talking about in our gold chat room today for a little while, is just because the market doesn't care about something anymore doesn't mean it can't move. And, I wouldn't have a massive position, but I would certainly be comfortable buying a little farther out premium, maybe selling some forward premium in Apple through this cycle. I think that the trade prices pretty well. But Apple could easily move $4, even on the earnings not being that great, or if they just surprise everybody. I mean, there's the stock is priced for almost no growth anymore. So, and I realize their iPhone 6 is, that upgrade cycle. This is that year where they're really dead. But the last time I saw the earnings this low, that was 2 years ago when Apple made that big move from like 400 to 700. Remember they had that blowout earnings cycle. The stock just kept going. It was conveniently after Icon had amassed a large stake in it. But that was the last time I've seen the earnings this cheap. You can buy September volatility for 22 in Apple. That's just not very much money. I'm sorry. It just is very, very cheap. So it's not certainly something I'm going to be in the Schlesinger camp. At minimum, this is not something I want to sell.
I think that sounds... Once again, sage advice from you by way of Mr. Don S. The other big story, of course, driving the market today, coming in the M&A side of the space, with Verizon apparently not content with their AOL purchase, I believe it was last year, deciding they want to buy the rest of the 90s internet. So they gobbled up Yahoo today. Kind of an interesting combo, Verizon and AOL, and now Yahoo. They have, I guess you can call it the legacy remnant of the internet from the 90s .com boom. Obviously AOL, and of course Yahoo, not exactly on boom times anymore, having a lot of challenge what to do with those properties. Still having some content online that people liked and services people use, like Yahoo Mail and Tumblr and some other ones like that. But overall, not kind of struggling in the realm and the era of Facebooks and the Twitters and everything else to really maintain their relevance, and of course Google and Gmail. So it's been kind of interesting, and Verizon apparently deciding, I think they spent total about 8 combined, a little more for the two companies, about 4 and change for Yahoo today. Yahoo selling off about a handle, about nearly 3% on the news today, closing about 38.30 or so. Just to name it does, about 50,000 contracts a day, doing nearly 130 today. Not surprising, about 4.5 to 1 calls over puts out there. That's where most of the action was. Verizon having a little bit more muted response, which is kind of interesting, only off about actually less than 0.5%, effectively unched on the day. And that's probably reflective of the fact that this was not a surprise announcement. It was off a little bit more than 0.5% intraday, and then kind of muting that towards the close. This is a story that's been bandied about for a while. No one was sure if it was coming now. Of course, Verizon earnings are indeed before they open tomorrow. So if you're going to announce it, I guess today is as good a time as any. Makes the earnings kind of moot, but still interesting stuff. I don't know. Was this popular in the pitch chat today, Mr. Rock Lobster? And also, what are your thoughts on Verizon doubling down on 90s era internet holdings?
Well, the only thing I could think of is that maybe the AOL stuff they bought actually is making them a lot of money. You would think they'd probably buy something like that because the other old school internet property they bought is actually generating a lot of dollars for them. And maybe they figure out a way that they can monetize all this. So that's the only thing I guess. Obviously, they paid a lot less for AOL than it was at the height of the internet boom, right? They paid, 1/10 the value of it?
Yeah.
And it looks like they're doing the same with Yahoo. Yahoo has a lot of customers. What do they still have? A couple 100 million active users? So, maybe they just see that for marketing. It still generates still generates cash flow. So I don't think, at least obviously it hasn't been that well managed since they have, since kind of the the investments in Yahoo did a lot better than the stock than the parent did. So maybe Verizon is seeing something there in all those eyeballs in the future. So who knows? But the price is right.
Apparently, yeah. $4 billion apparently is the deal. Doesn't include, of course, their stake in Baidu. That's a separate entity which is going to be spun off and remain a separate entity, effectively just to own that stake in Baidu, the one profitable thing, and there's some other Asian investments. Pretty much the only profitable thing Yahoo has had for some time. But you're right, they do still have some properties people use. We use Yahoo legacy, Yahoo Instant Messenger here at Options Insider still, so we'll need to switch. They're shutting that down. There was a big article in the Journal, I believe, recently about how a lot of crude traders still use Yahoo IM for whatever reason. So there's a lot of legacy products that are out there and popular with a variety of people. They just never really figured out how to put the whole together. Maybe Verizon, now that they're in the business of sending out AOL download CDs, if they can add Yahoo to that mix, can somehow strike gold. Meanwhile, it's time for us to strike on with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, time once again for the Odd Block, that portion of the program where we break down kind of the weird, the wild, the head-scratching, the kind of just strange paper that we see lighting it up in the old options market today. Going to kick it off, Mr. Rock Lobster. Actually looking back a little bit, we flag some interesting paper every now and then to kind of keep an eye on here on the show when we talk about it. We file it away to keep an eye on. And today's review candidate comes back from April. It's about mid-April when we previewed this one. It was Crown Castle International Corp, ticker symbol CCI. And this has been an interesting one to watch here. We talked back, I believe it was in mid-April, that these Jan 2017 a par 100 call spread went up back then. Paper was gobbling it up about 10,000 times for, it looks like, about 75 cents. As the day going on right now, this thing is trading pretty good. They can get out of it for, it looks like, about $240 or so, depending on prices. So a little more than 3x their money, which is kind of interesting. Yeah, the stock was, when we profiled this in April, about nearly 87, trading now about 97, 10 handles higher. So surprise, surprise, Mr. Rock Lobster, this person is it was a pretty well timed, even if they were a little bit ahead of the game here with you remember this paper from good old CCI? It's been a while.
I do remember this paper, and they got a power. Who would have known the market was going to rally 20 cents or whatever? Amazing. This whole concept of stocks are the new bonds. CCI is, I guess, a classic example of that. What else do you say? People are paying for yield. The company, pays 4 dividends a year, about almost $4 a share. And there you go. People have bid yield up to crazy amounts. And I don't know how it's going to end, but somebody knew something. So pretty amazing.
Indeed. Somebody knew something. They were a little bit ahead of the game. They came in April. But yeah, not poorly timed. They certainly weren't sure about the time frame, hence their Jan acquisition. And it seems to have worked out fairly well. Nice 3 plus X return. I think most people would take that over the span of a few months. Moving on to today's paper. Going to kick things off back in the financials with Bank of America. Ticker symbol BAC, BAC. Closing today, effectively unched right around 1437 or so on the day. It's the name that does, as you might imagine, pretty decent-sized paper, about 281,000. Actually trading fairly light today, only about 190,000 going up out there in Bank of America land, about 3.5 to 1. Calls over puts. That'll give you a little bit of an idea of, in this lightened flow today, what caught our eye. And in particular, listeners, it was all the way out in the September cycle where we first noticed this paper, I should say, out there in the SEP 15 strike. Paper just loving themselves some SEP 15s, Mr. Rock Lobster. Started off just sweeping it across exchanges, paying about 23 cents for these, doing it initially, about 22,000 times. That's against open interest of about 19,000. As the day went on, a lot more piled in to the tune of about 435,000. Excuse me, the open interest was 191,000, not 19,000. So size open interest on this strike as well. And in spite of all that open interest, this is probably opening paper. Seeing some interesting stuff going up out here over the past year or so. And certainly if you've been watching, Bank of America has been an interesting name to keep an eye on. Towards the end of last year into this time, August, all the way through the end of last year, it was kind of vacillating right around where we are right now, or actually a little bit higher than now, I should say, the 17 handle. Then it kind of sold off beginning of the year when all that crazy Sturm and Drang hit the market, and a lot of financial names like BAC got clipped a little bit. And it's kind of been hovering in this range, got as high as about 15 not that long ago, but pretty much been hovering in the 14 or so handle for quite a while now, for the most of 2016. Our friend here deciding, Mr. Rock Lobster, no more is this sucker hanging out at around the 14 half or so level. It's going to rally hard right past the 15 strike, and willing to put down a whopping 23 cents to do just that. All that buying action driving these up a little bit. They went out 24 cents at 25. So kick us off, Mr. Rock Lobster. Talk about the size upside here and back.
And back. So a couple things. Either somebody's closing their SEP 15s, they were short and they're closing them, or they're buying more. This to me just looks like buying more paper. I just look at the volatility in the financials, and I guess there are some dollars that are basically saying the financials are toast. There are not going to be any interest rate spreads forever, and they're not going anywhere. And I think that's another reason why the volatility has been driven down so low. Somehow they're still trying to make money, as long as, at least in the U.S., we have some kind of interest rate spread. So they are able to make some dollars, but I still think overall the volatility in this group is just, I know the VIX is low and the market is kind of it feels it's at least a little toppy. It's not going up as much anymore as it was the last couple of weeks, but it feels like very cheap. They're very cheap options to me. It's almost like they're too cheap. There's sometimes when the stuff's expensive, and this just, I was looking at a 1412 Strangle. I think it was in August. We were trading $13, and it was like 35 cents at the time. And, it's already basically doubled in value. So it feels like they're not paying any attention to the upside in these products, and I think that the upside could certainly happen. I like these as a buy. I just think all the stuff is way too cheap, but it's cheap in a good way, meaning I think you'd much rather buy it. So that's where I'm on all the financial stuff. I do own some financial juice, so I'm talking my own little positions.
You are a diehard juice buyer, sir.
Diehard. Well, when it's worth it.
When your juice is free, you buy it all. That's the Rock Lobster's personal motto. It's on his business card. We're going to turn our attention now to Asia. Oh, speaking of Asia, before I think I was running around. I had Baidu on the brain when I was talking Yahoo. I obviously meant Baba. So Baba, Baidu, half a dozen one, 6 the other. Tomato. I just offended half of our listeners, but I was just for some reason I was thinking all Baidu all the time. But Baba was indeed, and of course moving ahead to where our activity is in our next name. This is EWJ. That is, of course, the iShares MSCI Japan ETF, closing also essentially unched on the day, about $11.82. This is the name that does only about 12,000 contracts a day, so hasn't exactly been lighting it up of late. Certainly decent for an odd block perspective, but this name has done higher paper before, like days like today when it did about 142,000 contracts. So well over 10x out there, about nearly 140 to 1 calls over puts, listeners. That should give you some inclination of just what the heck was lighting it up out there. And a lot of things were indeed lighting it up. The big trade that caught our eye, though, was again out in September. September is the month du jour today for the odd block. It was the SEP 12 calls going up. Looks like paper blasting out, quite a few of them tied to stock. They sold those SEP 12s about 15,000 times for a nice 21 cents tied to stock. That's on open interest on that strike of about 44,000. Actually looks like about 20,000 lots traded back a couple of weeks ago. This, if anything, is maybe perhaps additive to that whole burst of paper we saw going on out there. Looks like someone perhaps decided that's an attractive bit of yield and putting it on out there. Also saw about 20,000 of the weekly July 12 calls going up, expiring later this week. So about 20,000 of those, which is interesting. On open interest, that's just 10,000. So clearly not a roll from July to SEP. Perhaps something else at work out there, because there was a lot of paper lighting it up out here in good old EWJ today. And of course, looking at a graph of our friend EWJ, has been an interesting, if not tumultuous year. Like a lot of names, the graph kind of bottoms out around the mid-February or so level, when things just seem to be at their most bleak for the market, and then, of course, slowly rally back with a few peaks and troughs along the way, kind of vacillating for the most time since then, between about the 11 and 12 handle. Looks like our friend here, if this paper is indeed piling in on more yield, deciding that 12 handle a pretty safe right, and doesn't mind taking his 21 cents off the table to do just that. Mr. Rock Lobster, what's your thoughts here on blasting out some SEP 12s here? Should mention tied to stock, if I didn't say that before. They were indeed tied to stock. What's your thoughts here on harvesting some yield in EWJ?
I think the Abenomics is just, Japan's not going anywhere. It is in the club of negative interest rate bonds. 13 trillion, by the way, at last count. People are willing to loan a government money and pay them for the privilege. I still find this is all bizarro land, and the central banks are doing dangerous experiments with our livelihoods. But hey, what the heck? That's what they get paid for, right? And this is a reflection of, you get some premium for it and just a not lot going on. EWJ has basically had a, $10.50 or $10 on a little panic sell-off, but 10 to 13. So they're writing some calls and trying to make some bucks. Probably the least exciting thing I could do right now would be to write premium in Japan, but that's what they are doing. That is what they are doing. I don't know. I don't see the use. I guess this is like a pension fund. Maybe it's the Illinois teachers union pension trying to find a way to pay their bills. So they're going to sell some EWJ calls. I don't know.
There you go.
But it's what it is. It's selling some juice over some stock, and thinking you're not going to get a whole lot of movement, which right now the thing looks dead, but we've seen deader things come back to life before.
We have indeed, and let's move on to our last name. Kind of a resonant theme for this name. They weren't exactly dead, but they did have some troubles in the past. This is, of course, Lululemon, ticker symbol Lulu, L-U-L-U. Of course, they of infamy for their invisible yoga pants, the super sheer, shall we say, yoga pants. A lot of ladies running out there with a surprise discovery when they go out to their workout classes. Of course, closing today about $77.60, right off, up about 2%, I should say, on the day. It's something that does about 10 to 11,000 contracts a day, doing nearly 2x that, about 18,000 contracts up there today. About 3.5 or so to 1 puts over calls out here, which should again give you some inkling of what drew our eye out here, and it was paper blasting away on the AUG 73 puts. Doing it when we first started seeing this pretty aggressively at about the 52 cent price level. About 9,000 went up in that first block at 52 cents, with a bunch of other smaller chunks going up behind it at prices up to about 55 cents or so. Total of about 11,383 going up on the day. Again, this is all opening because the open interest is just 90 contracts. So clearly opening paper out here. And someone, Mr. Rock Lobster, deciding to draw a pretty aggressive line in the sand here on good old Lulu. And this is fairly aggressive. I mean, looking back at the year that was for good old Lulu, they've hit some pretty deep down valleys to the tune of about 43 or so back towards the end of last year. They've kind of been on a slow and steady climb ever since then. But if you are perhaps, actually it wasn't that long ago, it was about mid-May when they were trading in the mid 50 handle or so. So these puts could certainly be in the money pretty quickly yet again. So that 73 level, perhaps fairly aggressive. I don't see where their earnings are, probably coming a little bit later in the cycle. So I'll have to check and see if there's some earnings included in this or not. But either way, pretty interesting, if not aggressive level here for some size puts in Lululemon. Mr. Rock Lobster, take us home.
I think we're seeing more of this, right? The line in the sand puts, where people are, okay, I'll take the stock there and that'll be it. So, and again, an aggressive level for Lulu. I think their earnings aren't until September though. They're the third month cycle, the March-June cycle. So March-June Sepdece, the old future symbols for the SPX. But we're seeing again a couple more of these line in the sand puts where vol's low, looking for yield. And if you've had, and you're right, Lulu really is. I have to say, it's kind of been on a bit of a tear, hasn't it, Mark?
Seems that way. It was in the 40 handle not that long ago. So, 2016 has been a good year for see-through yoga pants, apparently.
When is it a bad year for see-through yoga pants?
Always a bull market for invisible yoga pants, I find.
Yes.
Before we offend all of the lady yoga practitioners in our audience, it's Monday. It's time for some strategery, so let's keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block, the portion of the program where Uncle Mike breaks his silence and descends from on high, stone tablets and bubble pipe in hand to dispense some options, wit, and or wisdom. And Uncle Mike, I had a chance over lunch to sit down with my minion squad. We discussed a variety of different things as we do in our weekly catch-up meeting. And one of them was whispering in my ear something about spreads and whether you should buy them or maybe whether you should sell them, or maybe he said something about jams and whether you should buy it. So I couldn't really make it out because, as you know, the purple minions are kind of hard to discern exactly what they're saying. So either it's the former or you're going to talk about jams and jellies today. What is it, sir?
As much as I'd like to talk about jams and jellies, I think your minions are right yet again. Those guys keep following me around like they're the paparazzi or something.
So they earned their extra jelly bonus for the week?
Yes, they did, for sure. But anyway, what I've talked about on this show very frequently is selling a put spread on a dip in the marketplace because you have higher volatility in theory, of course, and the benefits of doing it, as well as the fact that if it goes against you, the ways with which you can work around it and that type of thing. But what I want to go through today is some things that you can do when volatility when the VIX is much lower than 19. It's definitely not there today. And the 5-point spreads with which I've talked about and I've done on SPY over the course of the last a couple of years since the weeklies have really become more liquid, it's just not there right now. So what I want to go through today, we talked a little bit about the diagonal call debit spread last week, But let's say that you don't want to put that much risk on the table. I want to go over some things that I've been doing recently, why I've been doing them, and how I've been doing them. Now, let's start by, let's say that right now you believe that volatility is a little bit lower, and you feel that because volatility is lower, you'd rather be a premium buyer as opposed to a premium seller. Okay, that's very honorable and very intelligent, in my opinion, when we have volatility at lower levels, because selling premium is kind of a difficult thing to do in this environment, unless, like Mark said, you have some individual names, but I'm talking about the market as a whole. If that's the case, then the first inclination that I had when looking at this, and I'm just kind of laying out my thought process the last couple of weeks, is that, well, I want to be bullish. I want to have some exposure to the marketplace. But, oh, man, a 5-point spread, maybe a week or two or whatever it's been after the Brexit, if we just go right back down to the levels that we were, that's just not going to be a good thing. So with that being said, I decided, okay, well, why don't we see if we can still have a similar amount of deltas on the table, but just not necessarily as much of a theta trade as more of a delta trade. So what I came up with is that instead of doing a 5-point short put spread on the SPY, there's a lot more to it than this, but I just kind of want to give you guys an idea of what I was thinking. Why not a 1-point call spread and be maybe more at the money? Maybe time can be working against us a little bit because, well, quite honestly, it's pretty cheap. So in looking at that, I decided that, well, we could do that. But the problem with doing a call debit spread kind of at the money is that, let's say the market goes higher and you want to close out the spread. Well, the bid-ask spreads don't become quite as friendly because, quite honestly, who's going to want to buy a call debit spread that's that far in the money that you're trying to sell? Usually the bid-ask spreads aren't very favorable in a situation like that. So I decided to go the synthetic route of selling put spreads with similar, with identical risk rewards, because of the fact that we're typically, when short puts out of the money, it's usually when a put's out of the money, as opposed to a call being in the money, it's usually a little bit easier to close the trade. So what I've been doing lately is I've been going kind of at the money, maybe even a little bit in the money, wanting time decay to be a little bit on my side, but going more for the delta over the theta. And I've just been doing these $1 wide put spreads. And the rationale is that my opinion right now is that I am a bull. Probably always will be. You never know. I might change. Who knows? I hang out with Mark Longo all the time. He can influence me in a lot of ways, but you never know. But with what I'm doing is trying to come up with something to where it matches the sentiment. My sentiment right now is that I think the market's going to do two things. One of two things. I think it's either going to go up slowly or up a little bit more. And if that's the case, then it's fairly easy to take profits on these $1 wide put spreads. It has been the last couple of weeks anyway. Or I think it's going to go down fairly significantly and fairly unexpectedly. This week's a great example of it. I'm flat right now in my SPY long option diagonal spread strategy. I mean, I still have holdings hedged and that type of thing like I always will. But in terms of the aggressive strategy, I'm flat right now. And with that being said, what I could do and what I'm looking to do tomorrow possibly would be to do something in line with a spread, but with a pretty narrow risk reward. And the reason for that is that if we do go up slightly, I can make a profit on it. We can benefit from it. But if we go down 40 or 50 points in a day, which, well, guess what? The Fed's coming out with news this week. We have earnings on some pretty influential stocks this week. We have all those things that I talked about in the trading block. Then, sticks and stones can break my bones, but sharp drops in the market won't hurt me because of the fact that I have a put option in place. So when you have that, it's a way with which to be aggressive, to be bullish, but have your risk management in place. This will work better in a lower volatility environment like what we have. Now, if we had a 25 VIX, I don't know if I would get the same premium of what I'd be getting. I don't know if it would necessarily work quite as well. But the concept is it's kind of a coin flip trade. Either you're going to make money or you're going to lose money, but make it so that the loss is not going to be so painful. Will this work every week? Good gosh, no. I'd highly counsel against you doing this very frequently. But if you think that there is some more room for a little bit more upside, you're concerned with downside, this is a tool that you can bring out from time to time like I am right now, and it could have some valor for it. So, for example, the last couple of weeks I've been in the 215, 216 short put spread, the 213, 214 short put spread on SPY. And with that, it's kind of one where it's something that I would highly recommend against trying to build a system on just that strategy. But in situations like this, when you want to have some long deltas and you want to be bullish, but you're just kind of concerned about some weird thing coming out of all the possible weird things that are going on right now, this is a way to protect yourself by putting less money on the table. And that is the strategy block for today, July 25th.
All right. Thank you for that, Uncle Mike. We all enjoy your forays into strategery. If you like the strategy block, then make sure you join us every Monday right around 3:40 or so Central Time, where Uncle Mike holds court with his options, wit, and or wisdom. We're all toying with maybe pulling some of those out. He's been doing those for quite a long time. We've been doing the show for quite a while. We have some good pearls of wisdom there in the archives as well. We've been toying with pulling those out into their own separate show, maybe like a best of the Option Insider Radio Network. Maybe pull out some of our debates here on the program. Maybe pull out some Uncle Mike strategy blocks and some of the other cool stuff we've done here and make it into a show. So maybe we'll see if we can get that rolling for you, because there's a lot of good nuggets of wisdom there in our archives. In the meantime, of course, you can always find the archives there, all 500 plus episodes, theoptionsinsider.com. As well as, of course, iTunes, a little bit different beast, though, because they kind of cap how many episodes they show. So if you want to see the full range of Uncle Mike's wisdom and the rest of the stuff we talk about on the show, probably the best place is, of course, our website or indeed our app. You can get them all there. Now let's keep on rolling with our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the name implies, this is indeed the portion of the program where we break down what we're keeping an eye on for the rest of this week. Of course, I have to bring it up. We've kind of gone most of the show without talking about it, which has been pleasant. We do have the Fed on Wednesday, yet again, rearing their ugly head, courtesy of our friends over there at CME with their Fed Watch tool. It's like about a 0.25% chance in September. Not a pretty negligible chance here of a rate hike in July, but not zero. And then looks like about a little bit more than 50% chance of a rate hike by the end of the year. So it looks like more people putting more confidence in some of the latter meetings than they are right now. I think it would be kind of crazy town to have them raise. Even the non-farms were strong, just given everything else going on in the global economy right now. The notion of raising domestically does seem a little bit silly, particularly with Mr. Rocklobster was talking about earlier with people having negative rates around the globe. But let's draw our attention a little bit more domestic, a little bit more micro, a little bit more straightforward. Yes, it's kind of the big week for earnings season this week. We were talking earlier about Apple. They're coming out tomorrow after the bell. I didn't mean to tease you about that earlier, Uncle Mike. They're pricing in about close to $4 on their straddle, so right around 4% or so on that one. Again, perhaps you feel that's a bargain, like perhaps Mr. Rocklobster does, in which case maybe you want to lean one way or the other going into earnings, or just avoid earnings entirely, which is always a nice way to play it, a safe way to play it as well. We got Amazon coming out after the bell. Always a contentious name, what they say and their guidance versus their actual results, often two different stories. And a lot of people always gunning for Amazon every quarter. Amazon seems to defy them. They've been doing it for quite some time, so they know the game by now. Boeing also on the 27th after the bell, as well as Baidu, the aforementioned Baidu, on Thursday after the bell. In our neck of the woods, we got SIBO and CME on Friday and Thursday, respectively, before the bell. So you're into trading some exchanges. You want to trade some VIX volume and things like that. Maybe that's the place you want to go. Or, of course, WTI and all the big movements out in crude. CME may be your place. And, of course, we haven't talked Ford on the show in quite a while. They're coming out Thursday before the open as well. course, wrapping up the day on Thursday, of course, big day on Thursday. You got GOOG, ye old GOOGs after the bell on Thursday. And tomorrow, if Apple wasn't enough for you, also got Twitter coming out after the bell. And splitting the difference right there on Wednesday, we got Facebook. So if you're hurting for something to trade this week, you're not trying. There's a lot of stuff on the docket this week. Let's start with you, Mr. Rock Lobster. Give Uncle Mike a bit of a chance to rest his vocal cords. What are you watching for the rest of this week, and what are your pit chatters excited about this week?
Well, we're looking at Twitter again. Cheap premium out to September. Amazon is always, who knows? See how the pricing is close. Like I said, Apple vol looks cheap. And I'm going to take a look at Google too, because Google they kind of do their rope-a-dope, where they have a couple quarters where they have all that capital spending and then they stop. Then they don't need to spend all that money, and then they make a bunch of money again. So again, I'm looking for surprises in technology, because it seems like the one part of the economy that has been, it's been doing okay. And especially social media is still growing. So I'm just walking through Chicago. Everybody's looking at a phone. I'm looking at something on social media. So if I take that as some kind of a hint, there's something there. That's all I can say about that. So
actually, they were playing Pokemon Go. If you don't know.
Yeah, but you need a phone.
Yeah, you do. They do. They weren't social mediaing though. They were throwing Pokeballs at each other. There, Mr. Rocklaps. I know they don't have that in Maine, because no one's walking around with phones in Maine. They're all too busy fishing and crabbing and doing all the other fun stuff you guys do up there. But here in the big city, yeah, we look at our phones every now and then. Got to catch them all. Got to catch those Pokies. Mr. Uncle Mike, what's catching your eye for the rest of this week, sir?
Well, I want to see if we can make new all-time highs in the market. We've been kind of pushing the envelope a little bit the entire week, with most of last week. And so I think that this could be a time for a lot of movement, just with the fact that you took probably 10 times the amount of the usual time you take up on around the block, just with all the stuff that's going on. So with that, I think that we could really be in for a nice breakout or coming down a bunch. So I'm definitely a premium buyer at this point in time.
All right, everybody. That music means it's time to bring to a close this very fun sojourn through the world of options known as the Option Block. But before we go, let's check back in one last time with my cohorts here, my partners in crime, see what they're cooking up, I should say. That may interest you. Mr. Rocklops, I know you guys just finished your big extravaganza here in Chicago, so you're probably taking a week to catch your breath. But that said, what's cooking in the land of the pit that may interest our listeners?
July 30th, we're having a future option trading class for our Saturday class. They're popular. We get a lot of attendance. For an Option Pit subscriber, they're free. But for people that aren't already customers, this is usually how we get them. Actually, we'll have a special guest star, a guy that trades futures and options and manages funds. So there should be some learning, as usual, going on for not much more than an eighth on a 10 lot.
There you go, listeners. Surf on over to optionpit.com to learn more. Of course, you can click on the link should be, I should say, in our show notes there as well on the website. If you are on the Options Insider, you can find it there. And Mr. Uncle Mike, in addition to going along and all the other fun stuff you guys are cooking up, what are you guys working on in the land of RCM Wealth Advisors by way of RCM Alts?
Although I'm too young to remember what an eighth on a 10 lot actually is, I'm sure it's very expensive and a great bang for your buck for anything with the Option Pit. For half the cost of your average stock commission, you can buy my book on Amazon Kindle, $3.99. Feel free to go there and buy it. And with that, that would actually be over 10 times the cost of the per contract commission rate, typically, if you work through the RCM umbrella through either TD Ameritrade or Interactive Brokers. If you are a self-directed trader and you are interested in possibly reducing your commission and having the advice of Uncle Mike at any time, feel free to contact me. I'd be happy to explain how our rates work, how things work, how everybody would work together to help you to become a better trader. And if you are interested, feel free to contact me either through email at mtosaw@rcmfs.com or through phone at 312-212-3531.
Well said, sir. Hit up Uncle Mike if you are so inclined. Let him roll your puts for you. You can sleep soundly at night knowing Uncle Mike is up early and watching the spoos and doing that work so you don't have to. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, and of course for joining us live. Love to see you guys in there as well. Remember mixlr.com to join us live, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.